Hello friends, welcome to this Bollinger Bands trading masterclass, which will provide you in-depth knowledge of Bollinger Band tool and also helps you in designing trading strategies using this amazing indicator. Friends, before we dive into the course, just imagine the scenario that you spot what looks like a profitable opportunity and you pull the trigger only to watch that market turn against you. Your stop losses keep getting triggered and your confidence starts slipping away. Now this is a story of many traders we all know too well, and it's often because of one key factor, that is volatility. Without understanding and managing volatility, even the best of the opportunities can turn into costly mistakes. But here's the good news for you. You are in the right place. This course will provide you with the in-depth knowledge of Bollinger Bands, which is one of the most popular tools for managing and measuring market volatility. Not only this, the best thing about Bollinger Bands is that it can be applied in all financial markets including equities, forex, commodities and futures. And Bollinger Bands works in almost all time frames, from very short-term periods to hourly, daily, weekly or even monthly. But why should you be so concerned with volatility? Well friends, volatility is utmost important if you want to succeed in financial markets. Now this volatility basically measures how large the upswings and downswings are for a particular stock or currency pair. When a stock's price fluctuates wildly up and down, it's said to have a high volatility. Whereas a stock or currency pair which doesn't fluctuate much is said to have low volatility. In layman, high volatility simply means momentum is high in that security, and this also means that risk is also high in that security. And this indirectly means that probability of good returns is also high. Volatility isn't just a market characteristic, it's the lifeblood of trading. To succeed in financial markets, you have to spot periods of high volatility and avoid times of contraction. Friends, I hope the concept of volatility is clear to you. So just look at these two charts. Both these are daily time period charts of HDFC Bank, but of two different occasions. Now can you guess which chart is better suited for trading in HDFC Bank? Well, obviously second chart or that period of time is better suited for trading in HDFC Bank. And one of the best reasons for our choice is that in second chart the stock is more volatile. With all these big up and down moves, chances of profitable trades is very high in the second chart of HDFC Bank. While in chart 1, where HDFC Bank is simply into consolidation phase, we won't get good returns. In fact, no trader or investor wants to be in a stock which have a very low volatility, because simply said, volatility means profits. Friends, if you are a day or a swing trader, then one thing you want is movement in the markets. There must be volatility in the stock or currency pair, whether it's in upward or downward direction. So is there a tool that can guide us when the stock is in contraction phase, that is stock is currently in sideways movement, or has low volatility, and so that we can stay away from such stock or currency pairs? Similarly, can we filter out the stocks or currency pairs where we can expect big movements? Well, the answer to all these questions is Bollinger Bands. Mastering Bollinger Band is very important for you as a trader, since this is one of the best tools to measure volatility, and thereby helping us in taking trades when volatility is high in the markets. Now friends, the purpose of Bollinger Bands is basically to provide a relative definition of how stressed the market is. Normally people trade Bollinger Band as buy when price hits the lower band and sell when price hits the upper band. Or some traders buy when price hits lower band and exit when price hits moving average or mid band. Then there are some other traders who buy when price breaks above the upper band and sells when the price falls back below the upper band, which is actually a momentum trading, that is trading with the trend. But friends, just blindly following these thumb rules is a sure shot recipe to fail. Now just see this Euro USD currency pair 15-minute chart. Here traditional Bollinger Band traders will buy when price hits the lower band and sell when price hits upper band. Now price hits lower band here, but just notice that there is no stopping here. It goes more down, as you can see here. So you can see just buying at lower band in isolation have led to multiple stop losses here. Now friends, this is the biggest misconception most Bollinger Band traders have. That is, they believe every time the price touches the upper band or lower band, then it's an entry signal. This is one of the biggest traps. They don't know what these bands actually represent. Bollinger Bands in fact mark volatility boundaries based on a moving average and standard deviation. But just because the price reaches one of these bands, it doesn't mean that it's time to buy or sell. New traders often jump into trades expecting the reversal the moment price hits the upper or lower band. But the reality is, trending markets can push price along the bands for extended period of time. In a strong uptrend, the price might ride the upper band for days, even weeks without a pullback. Similarly, in a downtrend, the price may hug the lower band for extended periods, as you can see in this Euro USD chart. So if you are buying every time the price touches the lower band in a downtrend, then your account balance is definitely going to suffer. This failure to understand the context of trends within the Bollinger Bands is a common reason why traders lose money. Again, just look at this chart of Asian Paints. And if you are one of those traders who buy when price breaks above the upper band and sells when the price falls back below the upper band, then as you can see, price breaks out of the upper band here, and on both these occasions the momentum could not sustain, which lead to loss-making trades. Now, as you have seen, just trading Bollinger Bands in isolation without using a proper confluence will often lead to loss-making trades. But friends, this is where this Bollinger Band trading masterclass will provide you an edge over traditional Bollinger Band trading practices and will help you in eliminating false signals. This course will in fact teach you the correct way to use Bollinger Bands in your charts so that you can increase the probability of your profitable trades. Most traders just use Bollinger Band in isolation, as you have seen in previous examples, and this often leads to lower probability of your successful trades, or you land up taking false trades. But in this course, you will learn many unconventional ways of using Bollinger Bands, which will not only bust many of your myths but will also provide you many high probability profitable trading setups. This course will in fact change the way you see your charts forever. Some of the strategies discussed in this course will even help you in getting high risk to reward ratio trades. In this course, you will learn multiple other ways of using Bollinger Bands apart from traditional uses like identification of overbought overselling conditions or Bollinger Bounce or Bollinger Squeeze. Not only this, you will actually learn to develop your own trading strategies using Bollinger Bands. Friends, all the concepts discussed in this course are explained with the help of practical examples so that you can understand the concepts in a simple and practical manner. Lastly, even if you have absolutely no knowledge of Bollinger Bands, even then you can join this course, since I will take you in a step-by-step manner towards mastering Bollinger Bands. So with this, let's see the curriculum of this course in detail and see what you will learn in this specially designed course. We will start this course by learning about the basic structure of Bollinger Bands. Here we will learn about upper band, lower band, mid band, and use of standard deviation for calculating upper band and lower bands. Then next we will answer a very important query that many Bollinger Band traders have, that is why we use 2 standard deviation as default and why not 1 or 3 or 4 standard deviations. Then next we will look at the calculations part of Bollinger Band and see how lower band, upper band and mid bands are formed using very simple and practical example. After this we will see the uses of Bollinger Bands, and there we will see many unconventional uses of this trading tool. After this we will see how to insert Bollinger Bands into your charts and also how to change the parameters. Friends, then we will see how Bollinger Bands are used to find the overbought and oversold conditions in the market. Next we will learn the very important concept of volatility divergence, which is one of the pillars of Bollinger Band trading. Then we will see the concept of Bollinger Bounce. After this we will also learn the concept of Bollinger Squeeze. Friends, then we will look into another important application of Bollinger Band, that is finding W bottoms and M top patterns. Now these are very high probability chart patterns that form around Bollinger Bands, and we will also learn some trading setups around these. Next, we will move into trading setups of Bollinger Bands. Now, we will learn 5 trading setups in this course. And the first one is Bollinger Bands plus RSI divergence trading setup. Now, please note it's seen that RSI works very well alongside Bollinger Bands. And we will form our strategy around RSI to develop some very high probability trading setups. Then second trading setup is Bollinger Bands plus RSI 60 setup. Then third trading setup of our course is Bollinger Bands plus WNM patterns. Then fourth setup is double Bollinger Band trading setup. And lastly, we will look at the golden crossover plus Bollinger Bands trading setup. So friends, as you can see, we start off with very basics of Bollinger Band and finish the course with some awesome trading setups. I will take you from beginner level, and by the time you finish this course, you will be in a much better position to practically use Bollinger Bands in your trading. So thank you, and I will meet you inside this amazing course.